Okay, ladies and gentlemen, welcome back to our course, The Law on Income Taxation. We are now in part 4 installment. This is your host, your professor, your coach, and your mediator, Professor Lyndon Maceren, CPA lawyer, real estate broker with master's degree in business administration and doctor of jurisprudence. So chapter 4 is about gross income. We define gross income, which means that it is the sum total of all the gains, profits, and income, not exempt from the tax. By law, not exempt from tax by law, derived by a taxpayer during the taxable year, whether from legal, illegal, even illegal, moral or immoral sources. So in this definition, it is exerted that all types of income and from all sources, whether legal, illegal, immoral, or moral. Huh? And according to the law, this is the statutory definition. The law defines gross income as all the income from whatever source derived, including but not limited to the following. These are the different kinds of components of gross income, which is not limited to them. No. So the first one is compensation. So compensation, this is different from the mode of extinguishing obligation. So compensation means here it is for the services rendered by a person, and it's paid in whatever form. Could be money, in kind, or in property. So the sources are derived in sources including but not limited to fees, the salaries, wages, commissions, and similar items. We'll discuss this first, compensation. Then another is gross income, derived from the conduct of trade or business, or the exercise of profession. In case the taxpayer is a professional, so whatever income or earnings he derived therein as a professional, then it is part of gross income. And third, we have gains derived from dealings in property. So the property could be real property or personal property. Then fourth, we have interest income. So these are interests in the deposits or interest, the way of lending money to other persons. Then we have rent. So rents for as payment for using the property of another person. Royalties, we have dividends, annuities, prizes and winnings, pensions, and partners' distributed share of the gross income of the general professional partnership. So the person here is a partner, and he has share in the gross income of the GPP, General Professional Partnership. It is a partnership of professionals like a law firm, like CPA firm, like Cebu Doctors Hospital. It's a partnership of doctors in Cebu. So those are examples. So we will discuss the exclusion from gross income. So according to the definition of gross income, it includes all sources, no? So from whatever cause or from whatever source. So it's a catch-all clause. And to supplement the enumeration by including any non-enumerative items which can be properly defined as income. So there are flows or earnings that flow to the taxpayer but are excluded from the computation of gross income. So what are these flows? Money flow or wealth flow. Okay, proceeds from life insurance. So if a person is a beneficiary in the life insurance of his parent, for instance, and his parent died, then he gets a life insurance that is not part of gross income. That's an exclusion according to the law. The amount received by insured as a return of premium. So premium is the payment of insurance coverage, and if in certain insurance there is a clause that if you if you if you're still alive in the course of the life insurance, let's say uh, you bought the life insurance when you're 20 years old, then the life insurance coverage is good for 30 years. Now you reach the age of 50, so once you reach the age of 50, you will receive a return of whatever premiums you have paid. So this is excluded because the return of premium is your own money. No? It's your payment to the insurance. So it's your own money. It's not an income. It's your capital. The amount received by insured as a return of premium. Number three, gifts, bequests, and devices. So gifts, these are donations. These are subject to donor's tax. Bequests, still donation, and devices also donation. No. Bequests could be personal property, and devices are real property. Fourth, compensation for injuries or sickness. So, when a person is injured and he is compensated for his injury, then that is not part of gross income. Five, income exempted under treaty. Treaty is an agreement between nations or among nations. So exempted. Sixth, retirement benefits, pensions, gratuities, etc. These are excluded from computation of gross income. Then miscellaneous items, income derived from foreign government, income derived by the government or its political subdivision, prizes and awards in sport competition, like if you participate in the Olympics, then you get money, you get gold medal, and upon arriving here in the Philippines, you get 5 million pesos as an award from the president. So those are excluded from gross income. And then there are prizes and awards which met the conditions set in the tax code, 13th month pay and other benefits, productivity incentives, Christmas bonus not exceeding 90,000. Then 13, GSIS, SSS, Medicare and other contributions. Then 14th, gain from the sale of bonds, debentures, or other certificate of indebtedness. Then gain from redemption of shares of mutual funds. So those are excluded from the computation of gross income, and these are explained in the next chapter. So now we discuss gross compensation income. This means any remuneration for rendering personal service. Generally, it is obtained from employer-employee relationship between the payer and the recipient, but the basis may be immaterial, meaning it can also be obtained by workers paid by piecework or by percentage or profits paid on hourly, daily, weekly, monthly, or annually. You know? So sometimes workers are doing piecework. For instance, you are painting chairs, you know, painting chairs. For every completed painted chair, you get 10 pesos. So that's your pay. So 10 pesos is your pay. So if you finish like 50 chairs in one day, so you earn 500 pesos. No? 10 times 50 is 500 pesos. So in this kind of setup, there is no employer-employee relationship because you are not being controlled by the employer, and you can work on your own without supervision. No? So if you are done by the day and you only completed like 10 chairs in one day, so that's only 100 pesos you earn. If you finish only 2 chairs a day, so you earn only 20 pesos a day. Diba? This is workers paid by piecework. So that's the arrangement there. Now for system of gross compensation income taxation, this is a valid system of taxation. Because what is this gross compensation income? Uh, Pure compensation earners, meaning if you are a taxpayer and your income is only compensation, meaning your income is only salary, 13th month pay, if you have bonus, very well. If you have overtime pay, you have no other sources. You are not a professional. You have no trade. You are not a driver of taxi cab. So you are a pure compensation income earner. You file your taxes by uh, gross compensation, meaning you are not allowed to make deductions. Stated here, the taxpayers are classified into different categories. You know? Their classifications rest on substantial distinction, and that makes the real differences. So taxpayers who are recipients of compensation income, meaning pure compensation earner, are apart from the rest, or it's a different class because they are not entitled to make deductions as they practically have no overhead expenses. So there's no deduction. Okay, it's different on the other hand to professionals because professionals are allowed to deduct. Let's say a doctor, he has a nurse as his assistant. He's allowed to deduct the salary of his nurse as an overhead or as an expense. Okay? So on the other hand, in the case of professionals in the practice of their calling and businessmen, there is no uniformity in the costs or expenses necessary to produce their income. It would not be just to disregard the disparities by giving all of them zero deductions and indiscriminately impose on all alike the same tax rates on the basis of gross income. So it is clear here that professionals are filing their income tax based on net income, not gross. So for pure compensation earner, they are uh, filing their taxes on the system of gross compensation. So the difference between gross compensation income from or gross income from net income is that net income is uh, the result of deducting expenses from gross income. Again, gross income minus expenses equals net income. Okay, so that is the difference between professional from pure compensation earners, or professionals or traders, or those who are engaged in business, no, because they are allowed to deduct expenses. Okay, so compensation income is in any form. It is taxable regardless of how or who earns it and who pays it. No? Thus, it is subjected to withholding tax. Okay. So compensation earners, they don't file income tax anymore because they are subjected to withholding tax. So all of their taxes are already paid by the employer by way of withholding tax. So this, when is withholding tax made? Every payday, no? So exempted from withholding tax are minimum wage earners. So the minimum wage today is 406. So if your income is only minimum minimum wage, then you're not subjected to withholding tax. Then we have employees receiving not more than 250,000 a year, also exempted from withholding tax. Then 13th month pay and other benefits not more than 90,000 per year. This is not subjected to withholding tax. Then de minimis benefits or French benefits, these are not subjected to withholding tax. No? So these are exempt from taxes as far as compensation income is concerned. So there are different classifications of gross compensation income. First, there is the basic salary or wages. So basic salary, wages, the difference between the two is that salary is received periodically for a regular work, except manual labor. So therefore, if you are monthly paid, you belong to the salary. No? So salary is given every 15 days of the month. 15 days. So every 15 days thereafter. While wage, these are earnings received usually according to specified intervals of work, like an hour's work, a day's work, or a week's work. So if you are paid weekly, you are earning wage, not salary. Then we have honoraria. These are payments given in recognition for services performed for which established practice discourages charging a fixed rate. Example of honoraria is honorarium for a lecturer. So whenever you would hire a lecturer for your research or your speech laboratory, then you pay him honorarium. No? Third, we have fixed or variable allowances. These are transportation allowance, representation allowance, COLA or cost of living allowance, and other allowances are added to basic pay. So these are added to the basic pay. If the amount exceeds 250 a year, then the employee is subjected to withholding tax. So when it's added to the basic pay and it exceeds 250,000, so this employee is now subjected to withholding tax. However, there are cases when these allowances do not form part as gross compensation of an employee, such as letter A, it is for ordinary and necessary traveling and representation or entertainment expenses paid or incurred by the employee in the pursuit of the employer's trade, business, or profession. So if you're a salesman and you're always traveling, that's your ordinary role in the business. You travel to different places, and in the process you entertain your customers. So the expenses you paid are not part of your business, your basic pay. So the employee, letter B, the employee is required to account or liquidate the expenses pursuant to substantiation requirement, meaning based on receipts presented. So there are receipts. No? So if the employee is going to account or liquidate his expenses, then that is not part of his basic pay. So we have recent rulings made by the BRR on employee allowances, and these are non-taxable. So if the transportation allowance is 1,500 given to rank and file, and 3,000 for supervisory. So well, again, rank and file is lower than supervisors. No? So supervisors is the in between the rank and file and the managerial employees. So higher than supervisor is the manager. So if it is 3,000 for supervisory employees, then it is non-taxable. So there are employees who are given taxi allowance or transportation allowance. And we're talking about monthly here. So 1,005 per month and 3,000 pesos per month for supervisors. For mobile phone allowance of 1,200 per month for supervisors or higher who are expected to be on call 24 hours. Another would be transportation and night shift allowances given to night shift employees. So those who are working between 10 p.m. to 6 in the morning. That's the night shift, no? 10 p.m. to 6 in the morning. Then there is meal and or out of town allowances of employees. By the way, EE is employee assigned to conduct field work. So field work. So you go outside of company premises and do your role as an employee. So this pertains to salesmen. No? Then we have taxi or transportation allowance of 100 pesos per day given to BPO or to BPO like those in IT Park, employees servicing global business 24 hours a day. So these are non-taxable, and these are not part of the basic pay. Also, classification of gross compensation income. There's commissions. It's usually a percentage of total sales or a certain quota of sales volume attained as part of an incentive. So let's say if you are a salesman of condominiums, then you have your, aside from your salary, let's say you're paid 15,000 a month, and then aside from your salary you also earn commissions. If your sale would exceed, let's say 10 million a month, then you will start earning commissions. So that would be part of the basic pay. And we have fees for services rendered like directors' fees, fees to public officials such as clerks of court or sheriffs for services rendered in performing their official duty over and above their regular salaries. Then we have tips and gratuities paid directly to employees by a customer of the employer for good services. So these are not accounted for by the employer, thus not subjected to withholding tax. Okay, so it's not subjected to withholding tax. Hazard and emergency pays, additional pay due to exposure to danger or harm. Recently now, in the midst of this pandemic, COVID-19, there was a law mandating establishments like hospitals and other frontliners, were doing their job to be given hazard pays of not less than, I think, 3,000 pesos per month for nurses and doctors. For non-medical, I think it's 1,000 pesos. I think it's per week. No, I'm not sure. I forgot. 1,000 pesos a week. Then we have retirement pay. This is a lump sum payment to an employee after serving the company for a long period of time and retiring from work into privacy. So generally it is non-taxable, such as received from SSS or GSIS. So what's the difference between the two, SSS from GSIS? So Social Security System is for private employees, while government system of insurance system, government social insurance system is insurance system for government employees. No, and this another pension would be, or retirement pay is due to old age. So and it is received meeting the following requirements. So if these requirements are met, then it should be non-taxable. First, the BIA Commissioner has approved the retirement program of the employer. So ER is employer. You should take note. ER is the employer here. Second, it must be a reasonable benefit plan giving to all retiring employees. So there's approval from the BIR and there is a program, and it's a reasonable benefit plan to all retiring employees without discrimination. So all employees. Then the retiree, meaning the employee who is retiring, must have served the employer for at least 10 years. And letter D, the retiree must be at least 50 years old. And it should have been availed of for the first time in his life. So if he has retired twice, the second time, so it's no longer non-taxable. Because some people retires twice. First working with the government, then moves to, after reaching the age of 50 years old, retires and then works in a private company, then retires after reaching the age of 65. So second retirement. So in that case, the requisites here are no longer met because it says that the retirement must be availed of only for the first time. If it's the second time, then it is now subject to tax. Then we have a separation pay. When does this happen? Separation pay. Employees are sometimes terminated from their job involuntarily, meaning without the employee's control. So in this case, the separation pay received by the employee is non-taxable. This happens when the employee is dead or died. Let's say he is a nurse working in the hospital, and because of COVID-19 he got infected and he died on the job. So therefore, involuntary. So he is entitled for death benefits, sickness benefits, disability benefits, or meaning he cannot work anymore because he's disabled, so he's separated from his job, or due to reorganization or merger of companies. So due to the because there are so many employees already, so you have to go. The company has to let you go. So employer is at the brink of bankruptcy, so always losing. And in this case, employees are retrenched, declared redundant, or employer cease its business operation, meaning it closes shop. It has to close shop because it's always losing. So in this case, it is involuntary separation pay, then therefore is non-taxable. And we have letter B, when it is voluntary. So if the employee is being dismissed from work, or he resigned voluntarily, then and he received payment, then that money received is taxable. It's subject to tax because it is voluntary. The separation is voluntary. It is at the employee's decision. Okay, now we go to pension. These are allowances paid regularly, lacking L, to a person on his retirement or his dependents on his death. So generally taxable unless it is exempted by law or approved by the BIR. Okay, vacation and sick leave pays, if paid or availed of as a salary of an employee who is on vacation leave, so VL is vacation leave, or on sick leave, so SL is sick leave, and he is off from work, then it is taxable. Meaning he's entitled to vacation leave, but let's say for 10 days, but he is still paid. Okay, he is still paid. So if he's still paid, then therefore it is taxable. Sometimes the vacation leave or sick leave are monetized, no? Meaning they are converted into cash. So if monetized and the unutilized vacation leave credits of 10 days or less is paid to private employees, meaning employees of private corporations or persons during the year, then it is not taxable. So if it's for 10 days or less, private employees. Okay, so if the vacation leave or sick leave credits are monetized, the unutilized, sometimes the employee cannot avail of vacation leave because the operations of the business is very demanding, no? So in this case, the VL or sick leave is unutilized. Sick leave when the employee gets sick, no? But he's very healthy, so he did not avail of any sick leaves. So if it is paid to government employees, it is automatic. They are not taxable, regardless of how many or how many days. It's immediate. It's automatic, non-taxable, meaning no tax withheld. But if we're talking about private employees, then it should not exceed 10 days to be non-taxable. So if it is after 10 days, so let's say you have 20 days because your company gives out 20 vacation leave days. So in excess of 10 days, you are now subject to tax. When we go to 13th month pay, 13th month pay is mandated by law. There's a law, no? It's a special law mandating all employers to give their regular employees 1 month's salary before December 20 or 20, yeah, December 20. So if the 13th month pay and other benefits received by the employee does not exceed 90,000, so it is not taxable. But if case it exceeds 90,000, then the excess of 90,000 is already taxable. Then we have fringe benefits and de minimis benefits. Fringe benefits or FB, these are goods or services or benefit furnished by an employer in any form. Could be cash, kind, or added, and it is added to the basic pay. It is taxable. No? While de minimis, but this one is paid by the employer, the tax. So de minimis benefits, these are privileges of small value given to employee from the employer. Let's say example, rice or rice allocations of 2,000 pesos, they are not taxable. Uniforms of or uniform allowance of 6,000 pesos a year is not taxable. Then overtime pay, these are premium payments for working beyond the regular hours of work. The regular hours of work is only 8 hours a day. So if you work more than 8 hours, you are now entitled to overtime pay premium. This is taxable. Then we have profit sharing. These are proportionate share of employees in the profits of the employer's business. Of course, these are taxable. 16th, the awards and special awards. Special services or suggestions that save the business. This is added to the basic pay. Excluded on this are the loyalty awards. No? Let's say you have worked with the company for 10 years. So loyalty awards is excluded. It's not part of the taxable. Beneficial payments, like obligations of employees which are paid by the employer, these are taxable. Like for instance, taxes, insurance, car amortization, it is part of the basic pay. Let's say the employee has a tax and it is the employer who pays. He has insurance, it is the employer who pays. He has a car, and the payment for the car every month, it is the employer who pays. So this is part of gross income. No? So we have illustration here. Miss Palad, who is single, reported the following income for the taxable year. She received salary of 384,000, honorarium 2,000, fee as a director 50,000, then COLA 6,000 or cost of living allowance, then 13th month pay and other benefits of 93,000 pesos, commissions 5,000 pesos, availed VL pay included in salary. It's already included in salary, so 12,000 pesos. Interest income deposits in BPI, so 3,000 pesos. Royalty from mining, net of final tax, 70,000 pesos. So these are all the income received by Miss Palad. So another information, Miss Palad retired at the age of 45 as of December 31 of the same year. So he is already retired. She received, so this is she received a retirement pay of 1 million pesos from her employer. So question, what is the gross taxable compensation income of Ms. Palad for the said taxable year? So the question calls for the gross compensation income. How much? So how much should be the answer? So what are to be excluded as gross compensation income? Of course, salary is included, honorarium included, director fee is included, COLA is included, 13-month pay is included, but only the 3,000 because the 90,000 is exempt from taxable. No? This one is gross taxable compensation income. Commissions is included, availed VL pay included in the salary. So this should be included, but it's no longer considered because it's already included in the salary. Then we have interest income. This is an interest income. This is not a compensation from the employer, so this is excluded, 3,000. And royalty from mining, it's a royalty income. It is not from her employer, so, and besides it is net of final tax, so this is also excluded. So excluded 70,000, 3,000 excluded, and then the 90,000 excluded from the 13th month pay. So all in all, the answer is 1,450,000 pesos. So availed VL pay included in salary is no longer treated, no, because it's already included in the salary. And the 90,000 of the 13th month pay is not included as taxable because it is non-taxable. Very easy. Okay, now we will discuss the other type of income from employees, which is the shares of stock received as compensation. Here the employee of a corporation is given stock, so it is treated as if the employer has sold the stock at at its market value and pay the employee in cash. So base of the value is the market value of the shares at the time the service was rendered. So the market value of the shares, it is the basis of the tax. So we have an example. On March 31, 2018, Attorney Doctor, a corporate lawyer of DC Corporation, received 200 shares of stocks of DC with a fair market value, FMB's fair market value of 90 pesos per share at the time. So the shares, what's this? The share to pay the services rendered, or the shares is to pay the services rendered by Attorney Doctor on December 1, 2017. So at which time the fair market value was 75 pesos per share. The par value per share is 50 pesos. So accordingly here, the base of value is the market share of the shares of stock at the time the service was rendered. So here, Attorney Doctor rendered the service on December 1, 2017. So this should be the basis 75 pesos per share. And not here, 90 pesos. So this is not considered. Only 75 pesos. So question, what is the amount of compensation of Attorney Doctor in this case? So the fair market value of the share is 75 pesos at the time of rendition of service, December 1. So multiplied by the number of shares received, 200 shares, gives you 15,000 pesos. So that is the compensation received by Attorney Doctor from DC Corporation. Then employee stock option. What is this? This is a privilege granted to key personnel of a corporation to avail of the corporation's share of stock in the future for a certain price. So rules, it could be as a compensation income if the market price is greater than the option price. The difference is a compensation income at the date of grant. So only the difference, no? So the market price must be greater than the option price. It would be a capital gain, meaning it's not taxable, when the stocks are sold and the excess of the market price at the date of the sale over the market price at the date of grant is a capital gain. So the excess of the market price at the date of the sale over the market price at the date of grant is a capital gain. Example, in 2018, Pedro's stock option to purchase was granted, this is the date of grant, by his employer corporation to purchase 10,000 common shares at an option price of 10 pesos per share, when market price was 15 pesos. So this given stock option, no? So employees are given lower price. So that's the privilege. So Pedro can save 5 pesos per share. So in 2019, Pedro exercised the option and subsequently sold the common shares for 18 pesos per share in the local stock market. Here, Pedro earned two types of income in 2019. As compensation income, it is computed by the fair market value minus the option price. So the fair market value is 150,000 pesos. This is computed by multiplying the number of shares, 10,000 shares times 15 pesos. This is the market price. 15 pesos per share. So it gives you 150,000 pesos minus the option price, which is only 10 pesos. So 10,000 shares times 10 pesos per share is 100,000 pesos. So this is compensation income of 50,000 pesos, supposedly in 2018, but only to report the income when it is sold, no, or when it is exercised, because in 2019 Pedro exercised it, so it must be declared in 2019. And then as a capital gain, the excess of the stock sold, the excess of the market price at the date of the sale over the market price at the date of the grant. So the market price is the selling price. The selling price is 18 pesos per share times 10,000. That gives you 180,000 pesos. Minus the fair market value, which is 150,000. So that gives out the capital gain is 30,000 pesos. So these are the types of income for Pedro in 2019. Compensation income of 50,000 and capital gain of 30,000 pesos. And we have cancellation of debt. So in taxation, the forgiveness of debt results in the payment of income or capital transacting. So depending upon the circumstances, there are rules to follow. So if a creditor merely desires to benefit a debtor and without any consideration cancels the debt, and without any consideration, cancels the debt, the amount of the cancelled debt is a gift, not an income of the debtor. So the cancellation of the gift of the debt is now an income, so it's subject to donor's tax. So if the corporation to which a stockholder is indebted forgives the debt, so this time the creditor is the corporation, and the debtor is the stockholder, then the transaction has the effect of payment of a dividend income to debtor. So therefore there is a dividend income. However, if the debtor performs services for a creditor who in consideration thereof cancels the debt, the debtor realized income for his services to the extent of the amount of the debt cancelled. So example, Miss Marie, a computer encoder of Mr. Chan, borrowed 10,000 from Mr. Chan, payable in 2 months. Miss Marie was not able to pay her debts on the time agreed. However, Mr. Chan cancelled her indebtedness in lieu of her 2-month services. So the cancelled indebtedness of 10,000 shall be considered compensation income of Miss Marie. Okay? So in you, because you have worked 2 months services, I will now forgive your debt. So no longer pay me. It is your salary for 2 months. So that's cancellation of debt. And now we go to insurance premiums as compensation. So when the employer pays the insurance premium of life insurance coverage of his employee, and the latter's family, meaning the employee's family, is the beneficiary, then this is now a compensation on the part of the employee. No? Meaning the employee also receives it as part of his salary. So the basis would be the amount of the premium paid by the employer. That's pretty easy. Then we go to the rule of convenience of the employer's rule. So there are sometimes allowances which are usually in kind. No? In kind meaning in like food. It's not money, in kind. So food, lodging, water, furnished to the employee for and as a necessary incident to the performance of his duties are not taxable. So example would be food and lodging, benefit given to a household maid or to a driver, no? So the house helper, if you have a house helper, you afford food, you know? You give her food, you afford her free water so she can take a bath, free use of bathroom, free use of room for sleeping, so sleeping quarter. So in this case, these are allowances in kind, and this is for the convenience of the employer, so this is not taxable. How about living quarters and meals? So if it is provided by the employer to an employee, it shall form part of employee's compensation. However, if it is done based on the convenient of the employer rule, then it will not form part of the employee's taxable income. So you must remember the convenience of the employer rule. No? So here we have compensation from a casual labor. This casual labor is irregular, accidental, or occasional work. No? Let's say, for example, you are hired for Christmas season, so you're a casual laborer. No? You are hired because of the Sinulog festival, so that's a casual labor. So it is not in the course of employer's business or trade, then it is not considered as compensation. If it's not to promote or advance the employer's business or trade, then it's not compensation. But if it is to promote or advance the employer's business trade, then it is part of compensation. If its payment was done by a corporation, then it is automatic compensation. So this is different from living quarters. It's another topic. So we have a sample illustration. Miss Angie owns Choco Company, a chocolate factory in Baguio City. She employs the following persons during a taxable year for a short period of time and pays their related remuneration. By the way, remuneration is payment for services. So these are the workers: Anne, Ben, Carl, and Dan. No? So Anne performed repair at the home of Miss Angie for 5 days, and the amount is 2,000. Is this part of compensation? The answer is no. Why? Because it is not to promote the employer's business or trade, because this is done at home. No. Then we have another worker, Ben. The services rendered is repair, where at the chocolate company for 10 days work, 5,000 pesos. So this is part of casual labor. Casual compensation from casual labor. Then we have Carl, accounting clerk, casual laborer for 3 months. This is part of casual labor. Then Dan, store helper of chocolate company. He worked for 2 months. Then this is included. So 528 plus 9, 37 gives you 42,000 pesos. 2,000 is not business related because it was done at home. The repair was done at home. Okay, so that ends the compensation or salaries of employees. No? Now we go to taxpayers who are in business or in profession. So what is a business? This business is any commercial activity engaged as a means of livelihood or profit by a person or group of persons. It includes trading, merchandising, manufacturing, and similar activities. On the other hand, profession is any endeavor or work requiring specialized training in the field of learning, art, or science, engaged in as a means of livelihood or profit of an individual or group of individuals. So example is practice of profession is a service business like CPAs, lawyers, medical doctors, etc. Okay. Now, gross income from business are classified into several groups. And they are the following: manufacturing or factory, merchandising or trading, mining, servicing, farming, and long-term contract. For the first three above, gross income is computed as follows. No? So the first three here: manufacturing, merchandising or trading, mining. So sales minus sales returns and allowances minus the sales discounts equals net sales. Then minus cost of goods manufactured or cost of goods sold. So cost of goods manufactured and sold. And you add incidental gains from investment or outside operations or other sources. Then you have gross income. So this is how to compute if the taxpayer has a manufacturing, merchandising, or mining business. For cost of goods manufactured and sold, here, cost of goods manufactured and sold, you have to compute it. This is the formula. So before we dwell on the formula, we will now define what is this cost of goods manufactured and sold. These are all costs in manufacturing the finished product or the finished goods which are sold, such as raw materials used, direct labor, and manufacturing overhead. The freight in cost, the insurance premiums, and other costs to bring the goods to the factory or to the warehouse. So how do we compute? This is the formula. So cost of goods manufactured and sold is first you add the raw materials used. So raw materials used is computed by adding raw materials beginning, raw materials purchases, raw materials insurance, and freight in. Then you deduct purchase discounts and the raw materials ending. So you get raw materials used. Then you add direct labor and manufacturing overhead. Gives you cost of goods manufactured and sold. On the other hand, if it is a trading or merchandising concern, you don't compute cost of goods manufactured and sold, but you compute cost of goods sold. So you use it, you place it here, cost of goods sold. No? So it is the invoice cost of the goods sold plus import duties and freight, sorry for the wrong spelling, it's a freight in, incurred in transporting the goods to the place where they are actually sold, including insurance while the goods are in transit. So how do you compute cost of goods sold? First, you get the inventory beginning. Then you add purchases, freight in, insurance for goods in transit, minus purchase returns and allowances, and minus purchase discounts, if any. So you get this one, which is you deduct this from the inventory, no, you add this from the inventory beginning. So once you have added it to inventory beginning, total purchases, you get the cost of goods available for sale, or the CGAS. Then you minus or deduct inventory end from CGAS, then you get cost of goods sold. Okay, should know this because we will have quiz. No? So for a service outfit, like car wash, or a machine shop, or a motor shop, auto shop, no? So this is the how to compute gross income and the minimum corporate income tax rate, income tax. So for MCIT purpose, gross income or gross GI or gross income from service business is computed as follows. First, you get gross receipts. Gross receipts mean all receipts. Even though the payment now is in advance, you still add it, no? Because this is using the cash method. Then minus returns and allowances, minus discounts. Then you get net receipts. So after net receipts, you deduct cost of sales. So the cost of sales in service outfit are the salaries of the employees rendering the services, and the benefits of the employees, consultants, specialists, plus the cost of facilities directly used in providing the services. These are the depreciation or the rent of the equipment and the supplies used, and plus the interest expense in case of banks. So also banks is a service outfit, no? So if it is a bank that you're computing, you add the interest expense. If it's not a bank, you don't add interest expense, no? Let's say it's a car wash business, so no interest expense. If it is an auto shop business, so no interest expense, no? Or air conditioning services company, no? So you get now the gross income. So to get the MCIT, you multiply the MCIT rate, which is 2%, and MCIT is the product of multiplying 2% from the gross income. So by the way, MCIT means minimum corporate income tax, no? So if the minimum corporate income tax is higher than the net income, excuse me, net income which is subjected to corporate income tax rate of 25%, if this amount is higher, then you use this one to pay your income tax. But if it's lower, you use the normal tax rate based on the net income, no? Then we have telegraph and cable services of a foreign corporation. This the GI or the gross income of telegraph and cable services of a foreign corporation shall include income from services within the Philippines only. So specifically, income may be derived from the following: gross revenues derived from messages originating in the Philippines. And number two, amount received by the company collected abroad on collect messages originating in the Philippines, and deducting from such amounts paid or accrued for transmission of messages beyond the company's own circuit. Beyond. The amounts received with respect to collect messages originating outside the Philippines shall not be included in the taxable gross income. Okay, so let's say telegraph company and cable services is based in Hong Kong, and there are messages originating in the Philippines. So that company is subjected to tax here in the Philippines. And we go to rent income. So these are earnings of property lessors, real or personal. It also includes all other obligations of the lessor, which are assumed or paid by the lessee to a third party in the lessor's behalf, such as interest, taxes, loans, insurance premiums, and others. So if these are liabilities of the lessor and paid by the lessee in behalf of the lessor, then these are part of the rent income. So we have a sample. Question is to determine the annual rent income of T Bazaar. And these are the data. On January 1, 2019, T Bazaar leases a portion of its commercial space to H. Lau for a period of 3 years with the agreement that Lau should be responsible to pay the following. Advance rent of 100,000 pesos, monthly rental of 25,000 pesos, annual insurance premium of 5,000 pesos, annual interest expense of 3,000 pesos, and real estate tax of 2,000 pesos. So the last three here, C, D, E, these are obligations of the lessor, which the payee is which the lessee is paying in behalf of the lessor. So these are part of the rent income. So how much should be the annual rent income of T Bazaar? Remember, this is a rent business, so all cash received by the business is considered as income, regardless if it's advance or advance payment or advance rent. It is part of income. Therefore, we will compute advance rental will be included, then monthly rental of 25,000 is included, of course. But the question here is annual rent. So 25,000 should be multiplied by 12 to get the annual rent. So that gives you 300,000 pesos. 25,000 times 12. Then annual insurance premium is added, as well as the 3,000, as well as the 2,000. This is 10,000. No? So 300,000 plus 100,000 and 10,000, it gives you 410,000 pesos. So that's the answer. 410,000 pesos. Explanation without the I. The declared income, whether Bazaar is using cash or accrual method, 100,000 should be added. No? And then multiplied by 12. Okay, so that's the answer, 410,000. Now we go to security deposit. Security deposit in rent. No? This happens when the lessor asks for security deposit in order to pay for unpaid bills like utility bills, unpaid electricity, unpaid cable TV, or unpaid telephone bills, and then the lessee has already left. No? So in order to avoid using the money of the lessor, he now requires from the lessee to make a security deposit. So there are two types of security deposit, with restriction and with an acceleration clause. So security deposit with restriction: if the advance payment or the rent is a security deposit which restricts the lessor as to use it, it is excluded in the determination of the rent income. No? So if it is with restriction, the lessor cannot use the money, then therefore it is excluded from the rent income, because it is therefore a liability. No? Second, if the security deposit is with an acceleration clause, then the advance payment or the rent is a loan deposit or option money for the property, or a security deposit for the faithful compliance of the lessee of the lease contract. Then it is included in the rent income. So it's not part of the rent income. When can it be a part? It can only become an income to the lessor when the lessee violates the terms of the contract. No, this would be as penalty. Okay. So there are also leasehold improvements in rent. So this happens when the lessee, the one who is using the property of the lessor, erects structures or improvements in the leased property. And after the end of the term, it will become the property of the lessor. No? So reporting is done in the following methods. Outright method. So leasehold improvement is reported as income once it is completed and at its fair market value. Second, spread out method. So the book value of the improvement at the end of the lease is reported as income for each year of the lease, an aliquot part thereof. No? Spread out method. So this, we have an example. Say H. Lau built improvements worth 1.5 million in the leased property and was completed after 3 months. So we have the fair market value 1.5 and completed after 3 months. So the improvement has an estimated life of 5 years. So depreciation will be spread out to 5 years. So if you use the outright method, so for outright method, the 1.5 million pesos is reported as rent income of the lessor on the first year, plus the monthly rent, etc. No? For spread out method, every year until the 10th year, no, this is every year until the third year, no? Until the 3-year, the lessor reports rent income of 150,000 pesos from the improvements. I'm sorry, this that error here. It should be 200,000 pesos. Reports rent income of 200,000 pesos from the improvements. So I corrected it. Okay, for spread out method, every year until the 3rd year, the lessor reports rent income of 200,000 pesos from the improvements. This is the spread out method here. Okay. So how do we compute? The cost of improvement is 1.5 million pesos. We minus the depreciation for 5 years. So 1,500,000 divided by 5 years, and times 3 years, because the rent is good for 3 years, no? So times 3. So at the end of the lease, the book value of the improvement is 600,000 pesos. Because it says here in the spread out method, you compute the book value of the improvement at the end of the lease. So at the end of the lease, the book value is 600,000 pesos. No? So in sum, the lessor must report 600,000 pesos. So divided by 3, or 200,000 every year for 3 years as income from leasehold improvement. Okay? So that is for spread out method. So for outright, 1.5 million in the first year. For spread out, 200,000 pesos every year for 3 years. No? So if we compare outright versus spread out, so this is the difference. No? In outright method, the year 1, 1.5 million is reported. But we have the lessor can claim for deduction of depreciation expense of 300,000 pesos. So net income from improvement is 1.2 million pesos. And in year 2, he presents a 0 improvement minus depreciation of 300, so that would come out negative 300,000. In year 3, 0 improvement, then you pay 300,000 pesos. Deduct depreciation expenses 300,000 pesos. You get net income or loss of 300,000 pesos. So if you total this 3 here, 1.2 million minus 300,000 gives you 600,000 as net income from improvement. But if you do the spread out method, which is 600,000 divided by 3 for every year, you declare 200,000 pesos as your income from improvement, so it gives you the same 600,000 pesos, no? Total income from improvement. But it's ideal to use the spread out method because you don't incur big income tax liability on the first year. So if you are a CPA, you should use spread out method. Okay, what if the lease contract is pre-terminated, meaning the lessee decides to cut short the contract? So if lessee made immovable improvement on the leased property and the termination of the contract was made before it expires, meaning it's pre-terminated, then there are rules to follow. No? So if the improvement, number 1, if the improvement is destroyed before the expiration, then the lessor is entitled to deduct as loss for the year when such destruction took place. So based on the amount previously reported as income, then less any salvage value and less insurance collected, if any. So you minus the salvage value minus the insurance. No? But if the lease is terminated so that the lessor comes into possession of the property prior to the final fixed period of the lease contract, then the lessor received additional income for the year if the value of the improvement exceeds the amount of the income already reported. So in number 2, the improvement is still there. So the lessor comes into possession of the property and enjoys the benefit of having the property, and now the value of the property surely would exceed the amount of the income already reported. Okay. So we go to gains from dealings in property. This actually will be discussed in the later chapter, but as a preview, it is an income derived from the sale or exchange of assets, which results in gain because of the excess of the amount or value received by the taxpayer over the determined value of the property he has disposed of. So GR, or general rule, gain or loss arising therefrom is taxable gain or deductible loss. Okay, let's go to passive income. These are income which the taxpayer merely waits for it to be realized. Example would be yield from deposit substitutes and trust fund, interest income, royalty income, dividend income, prizes, and winnings. So passive income is subjected to a final tax, meaning it is withheld by the payer. So say for instance you won the jackpot prize in the PCSO of 50 million pesos. Now it is subject to tax, and the tax is 20%. So before PCSO gives you 50 million, PCSO will withhold 20%, and that is 10 million pesos. So you will receive a net amount of 40 million pesos. And the 10 million will be remitted by the PCSO as a withholding tax from your pay. And it will state there withholding tax of your name. No? So meaning you have already paid the tax. Because why? Because it's final tax. So you need not report it to your income tax. You need not report it as part of your income tax because it's already the tax is already made in final. So that is what what it means when it says final tax. No. So that is what is included here. As such, it is no longer included in the ITR or the taxable income. No? Income tax return, the ITR. Right. Yield from substitute deposits and trust funds. A deposit substitute is a debt instrument issued by the bank to borrow money from public other than from the client's deposit. So a deposit substitute yields earnings which are treated as interest. On the other hand, a trust fund is any estate, especially stock, securities, or money which is held in trust by a person in behalf of another person. So a TF, or a trust fund, yields earnings which are treated again as interest. No? So interest income is an earning derived from depositing or lending of money, goods, or credits. So unless exempted by law, all interest income is subject to income tax. For individuals, except non-resident aliens not engaged in trade or business in the Philippines. So this is the except non-resident aliens not engaged in trade business in the Philippines. Interest income from long-term deposit or investment, example savings, common or individual TF or trust fund, deposit substitute, investment, management accounts, and other investment, shall be exempt from income tax, provided that the following conditions must be met. Number one, the depositor investment must be evidenced by certificates conforming to the BSP prescribed form. So this is form, not for. Prescribed form. Sorry. And number two, the same must have a maturity period of not less than 5 years. And in denominations of 10,000 pesos or other denominations as may be approved by the BSP or the Bangko Sentral ng Pilipinas, issued by banks, not by Non-bank financial intermediaries are finance companies. So it should be issued by the banks, no? So if the TF or deposit substitutes or savings or time deposits would meet these requirements, it's a BSB prescribed form and it's more than 5 years, then it is not subject to income tax. But in case the holder of the certificate pre-terminates the deposit substitute or investment, this is pre-terminated. So many errors. Okay. But in case the holder of the certificate pre-terminate the deposit substitutes or investment before the 5th year, so a tax shall be imposed on the entire income and shall be deducted and withheld by the depository bank from the proceeds of the long-term deposit or investment certificate based on the remaining maturity thereof. As follows. As follows. If the deposit substitute or investment has lapsed 4 years, but not more than 5 years, so to less than 5 years, so the tax would be final tax of 5%. But if it was pre-terminated on the 3rd year and not more than 5 years, so it is 12% final tax. But if it was pre-terminated while it is still less than 3 years, so the final tax would be 20%. Okay, illustration, Mr. W invested 1 million in a 12% long-term deposit certificate, BSP prescribed form, with a 5-year maturity. Question, is the interest income from investment subject to income tax? What's your answer? Very easy. Base here, it must conform with the BSP prescribed form. This is checked. And maturity period is not less than 5 years. It says here with a 5-year maturity. So again, number 2 is checked. Number 1 is checked. So therefore, the answer to the question is, it is not subject to income tax. It is therefore non-taxable. However, if Mr. W will pre-terminate the deposit substitute or investment, then it will be subjected to the following final tax, which is 5% in case it is 4 years or less than 5 years, and so on and so forth. And here's the answer. No, since it has maturity 5 years, but in the case of pre-terminates, it shall be subjected to final tax by the depository bank. Okay, so we will make a break here and we will continue discussing in the second segment of this recording.